Today, we're going to talk about Polkadot and why this market must break out over the coming weeks. Not why I think it's going to break out, but why it must break out based on a terminal pattern that has developed. And I'll also show you some targets that I'm watching when the market does break out. Now, if you guys enjoy this content, be sure to subscribe to the channel and also click the bell icon so that you get notifications every time I post these videos. Okay, guys, so looking at the Polkadot daily time frame, we talked about this market a few weeks ago, and we were looking at the $20 confluence of support down here. Now, there's also a horizontal level through this area based on some of these highs back here and these lows. But as of right now, it doesn't look like the market's going to test that level, at least not without breaking this trend line off of these lows back here. Okay, now the one thing that everybody's talking about at the moment with Polkadot and also Bitcoin and a lot of other charts is the head and shoulders pattern that has formed. So if we look at the price action since September, you can see where we have this potential left shoulder back here. We have the head and also a right shoulder. So you can see this type of formation on a lot of different charts. There's even one on Bitcoin. And a lot of people are saying that this is pointing to a bear market and that markets are going to start trending lower. And while that could be the case, I'm going to show you a few things here to why I don't think that's going to happen. At least I don't think this is going to play out the way people think it will. So looking at DOT, we can see that all of this price action back here, anytime you see a head and shoulders where there's a lot of price action to the immediate left of that pattern, it means that this is a lot less likely to play out. Okay, so here is the head and shoulders everybody's talking about, and here's all the price action that I'm referring to. Now, the reason this is the case is because for this to play out, the market would have to take out a lot of these clusters of price action back here. So in other words, there is going to be a lot of support on the way down for Polkadot to where it's going to prevent a head and shoulders pattern like this from playing out, or at least make it a lot harder. And if we compare that to something like Bitcoin, okay, so what Bitcoin did earlier in 2021, if you look back here, this was also sort of a head and shoulders pattern. Now, I tend to refer to this as a rounded top, but you could still say it's a head and shoulders pattern. It still qualifies as one with just two left shoulders. Now, the reason this pattern worked out and we got that move to the measured objective down around $30,000 is because there was nothing to the left of this pattern, okay? A lot of buyers had gotten trapped in this price action. A lot of liquidations occurred back here in May. And so the reason this worked out and it played out so quickly is because there was really nothing back here to prevent the market from cascading lower. So if you compare this to something like this on Polkadot, notice how this head and shoulders right here has to deal with all of this price action back here in order for it to play out. Okay, so the more price action you see to the left of a topping pattern or potential topping pattern like this, the less likely it is to play out. So let's talk about another reason why I think that this is not going to play out the way people think it will. And that is if you take the neckline here. Okay, so the neckline would be drawn from this low back here and connected to these recent ones. So here's your neckline of the pattern. And again, here is the left shoulder, the head, and the right shoulder. Now, keep in mind, this is just what people think is going to happen. This is the pattern people are seeing right now. I am not saying that I see the same thing, okay? But if you look at the height of this pattern, from the neckline up here to the height of this pattern is right around $30. So there's a problem as soon as you start looking at this pattern, okay? And for those of you who are well versed in this, you know exactly what I'm talking about. And that is that the height of this pattern is $30. So if we measure $30 lower from the neckline, and that's how you get a measured objective for a head and shoulders pattern. So if we take a potential breakout point, let's just assume that DOT were to break below this area back here. Okay, so Polkadot breaks down from this area right here within the next few weeks. So what you would do is from this neckline, you would measure $30 lower from that neckline. Obviously, we're starting at $22. So the problem here is that 22 minus 30 gives you -8. And obviously you can't have a market that goes negative, okay, unless you're talking about oil, right, a couple of years ago. So therein lies the problem, in that Polkadot would have to go negative for this to work out. Now, of course, it doesn't mean that this market couldn't trend lower. Okay, it doesn't mean that that's going to happen. But as far as this being a head and shoulders pattern and this pattern is going to play out here over the coming months, I don't think that it's going to. At least, like I said, I don't think it's going to play out the way people think it will. And furthermore, this market, don't forget that on a macro level, this market is still in an uptrend. Okay. Yes, short term we have a downtrend, but macro, this market is very much in an uptrend. And I can say the same for just about every single crypto chart out there. So Polkadot is in an uptrend. The objective of this pattern, this head and shoulders that everybody's talking about, gives you a negative number, which does not work. And furthermore, like I said, it would have to deal with all of this back here in order for it to play out. So it would be a lot harder for this to play out than something like the Bitcoin top that we saw back here in April. All right, so I hope you guys are still with me here. I know it's a lot to cover, but let me show you why I think that this is actually a bullish pattern and not a bearish one. Now, before I get to that though, guys, if you are enjoying the content, be sure to hit that like button and also subscribe and click that bell icon. It really means a lot to me when you guys do smash the like button because it shows me that you are enjoying this content, which makes me more motivated to make more of these videos. All right, so I think that this is a bullish pattern because instead of this being a head and shoulders pattern, this could very easily be a falling wedge. So if we take this high back here and connect it along the recent highs, you can see where very quickly, okay, we get something that goes from a bearish pattern to a very bullish one. Now, you could extend the level off of these highs back here, okay, but it's a little bit messier that way, and I think that this is a lot cleaner, and it's also a lot more conservative, okay, because DOT would have to close above this line up here, whereas if you drew it off of the high back here, then it's a little bit lower, okay? So I think it makes more sense to place the level off of this high back here. Now, the reason I said that the market has to break out over the coming weeks is because this is a terminal pattern. And what that means is these two levels come together over the next few weeks here. So the latest that DOT can go without breaking out is going to be somewhere in the second week of February. So this market has to make a decision here over the coming weeks. And the fact that this is a falling wedge, okay, which is inherently a bullish pattern, and we also have the market in a macro uptrend. All right, I do have reason to believe that this is more likely to break higher than lower like everybody's expecting. So what everybody thinks is a head and shoulders and a bearish market, okay, I don't see any signs of that right now. We don't have this market trading below this support down here. We also don't have a market that is making lower highs and lower lows on a macro level. Again, remember, short term, yes, the market is in a downtrend, but when we zoom out and look at this market overall, it is very much in an uptrend, and it's coming in to this terminal point right here. Okay, so is the market going to break higher? I personally think that there's a very good chance it will. And if it does, the area I'm going to be targeting is up here. The first one will be 32, 38, and 45. So we talked about these a few weeks ago, and they're very easy to spot. So 32 was support back here, resistance later on. Same thing with 38 and also 45. Okay, so those would be my targets if we do get that break higher. Now let's talk a moment about what it's going to take to confirm that break higher. There are two ways this can play out. So obviously we either get a move higher or lower from here, but the way I would play it is we either get a move down here into support around $22 over the next week or two, in which case this becomes support, and I will personally be looking for a potential buying opportunity from that area. Alternatively, we get the move higher above this trend line before we see $22. But either way, what I would be watching for is a break above this trend line up here. So we need to see a daily close above that to confirm the breakout. This becomes support, and then we get that move potentially up toward 32, 38, and $45. But the daily close above this trend line right here is going to be critical. Notice how Polkadot tried to break out here recently, but failed and is so far rotating back toward this $22 support area right now. Okay, so while everybody's bearish on Polkadot and really Bitcoin and the rest of the crypto market, do not be surprised if later this year we get something like this, where the market breaks out of this pattern and retests this trend line up here. Now, it could obviously break from that, but that obviously gives us, a huge move for this market and a lot of other markets too. But don't be surprised if we do get something like this, where DOT breaks out of this terminal pattern to the upside, okay, retest support maybe, breaks out from here, and then starts to move higher up toward $32, $38, and $45. And eventually later this year, we get a move up here into this resistance area, potentially somewhere around $60, maybe $65. Okay, so this macro pattern right here, again, DOT is making higher highs and higher lows, guys. I can't stress that enough because everybody's getting bearish on the market right now as it comes into support within a macro uptrend. Has the environment changed? Yes, the macro fundamental environment has changed really for any risk asset going into 2022, but that stuff also takes time. There's a lot of overlap between those changes. So I am still expecting one more melt up phase later this year. And for Polkadot, that could very well come on a break of this rising wedge pattern. Okay, just remember though, that we could still get a retest of this area down here around $22 support first, and also that the market needs to break above this trend line, close the day above it in order to expose $32, $38, and $45. All right, guys, so I hope that this video has helped. If you want more of this content, be sure to subscribe to the channel, click the bell icon, smash the like button, and also leave your comment below, and I will talk to you guys again tomorrow.